Our discussion before the break, how do you see the competition in the banking sector, especially the one who focus on MSMEs market?
So MSME is a hugely untapped market. There is a big demand which is not served. As Amar Bank, when we started, we had a philosophy, and the philosophy is same, that technology must impact lives, must improve lives. What it means is we go after the underserved segment. An underserved segment is huge. It is right now more than $150 billion kind of untapped demand. So competition is rather welcome because more of these customers, underserved, will come into the served segment, which will be helpful for the full banking sector and the economy. Then we are quite advanced in technology, in digital. And the reason why we were able to grow more than the industry average is because the risk models and the data and technology is poised to be able to serve these customers in the cost-efficient way, because the customer's loan amount is small. If we are going to serve them manually, non-digitally, then the cost of servicing is very high.
And we see the underserved segment is also have a higher risk. How do you manage?
And that is where our advanced risk models come into account. Our risk models are big data based. We started back in 2014, so the models have improved significantly since then because the data footprint by the users is huge. We are very advanced in machine learning, and of course we are in the AI to be able to provide a better value product to the customers. So that's where we see that the risk is not going to be, so for two banks, how the risk is not going to be different. How they are going to assess that risk is going to be different. And that's where the risk model capabilities play a bigger role in being able to service this market.
Does it show in your NPL number?
Yes, and that is where our NPL is around 1.5 to 2%, whereas someone who is serving to a corporate segment, their NPL may be 0.5 or 0.75.
So if you think the MSMEs is actually still growing, do you think it's also connected to the cut rates? I mean, if there are more cut rates in the second half, do you think the demand from MSMEs will grow higher?
So BI has recently cut rate, and we have to see that how much of it impacts the demand. Now, cutting rate is more of the supply side. However, we are more positive about the demand side, which is in the stimulus. That will spur the demand much more, and that will have more positive impact. And the stimulus is a good amount of stimulus, and also going in the right direction, which is to increase the consumption. And we're quite positive about this stimulus which has been announced, and that I think has going to be much bigger impact than just the rate cutting.
So you think the one who will be more effective is more than fiscal stimulus compared to the monetary stimulus?
Right, because monetary stimulus plays a bigger role when there is a liquidity issue in the market, when you want to increase liquidity. But as we can see, that's not the case. It will have an impact, indirect impacts, so direct impact on the corporates, and then the indirect impact on the MSME. But direct impact on MSMEs and the SME segment is going to be with the consumption. So consumption will have much bigger impact on the economy than just the monetary policy.
When did you think that we can see the impact of the stimulus that been given by the government? Do you think it's in the short term, or maybe it will laggard? Because normally it's also laggard like 3 or 4 months until we see the result.
Yes, that's true. Because when the consumers receive the funds and all, immediately you don't see the change in the habit. They receive, and then it takes around a month or two to be able to see in the numbers. But you're right, that 3 to 4 months is the time frame that post-implementation of the stimulus, we can see the positive numbers.
Does it mean that we still can see the result by the end of this year?
Yes, stimulus result, I think we will see it within this year.
Mm-hmm. Do you think that the projection, can we see it in the demand of credit from MSMEs?
Yes, also that will happen because indirectly it will increase the credit demand. Credit demand will be impacted by two things. One is consumption, but also, as we were mentioning earlier, that some shift of the supply chain which would take place. So MSME's demand would more likely to grow in the fourth quarter.
Back to the cut rate. How many cut rates that you think is still possible in the second half 2025?
So there is a linkage, right? Linkage has been now disconnected with the Fed cut rates. If we see will Fed cut rates right now in June or July, market tools are saying that they won't cut rates because there is a Fed watch tools, the place at probability of 97% of not cutting the rates. But we never know, very likely that there is a possibility that by July there is a cut rate by Fed. Now if that happens, then there is going to be more rate cutting in Indonesia. But if the Fed is not cutting rate, then I don't see much pressure on BI right now to be cutting rate because they have handled the rupiah depreciation quite well already. Rupiah is stable. It did breach 17,000 once. So there is no such urgent need. I think first we need to see the impact of stimulus, then just going after cutting the rates.
Based on what we see in Bank Indonesia's cut rate in January, it was when rupiah was not in a very stable position. So do you think even though the Fed won't cut rate in the second half 2025, Bank Indonesia still has room to cut rates more?
Bank Indonesia definitely has room to cut. Actually, the balance sheet of Indonesian government is quite strong. Yeah, so by cutting rate, they can increase the borrowings, overall debt, because overall debt to GDP of Indonesia is quite low. So some of the fiscal structural changes which would need some funds, that can be utilized for. So there are two parts to that. One part is that directly increasing the consumption. Another is to implement some fiscal changes which would require the country to borrow some funds, and there the reduced rate would help. However, the inflation is definitely in control, which is also gives BI a lot of room to be able to cut rate.
Mm-hmm. How it will have a big impact for Amar Bank growth, especially in profitability for the rest 2025?
So whether there is a rate cut or not, our market is micro SMEs, which, as I was mentioning, the demand is untapped. Our first quarter has been excellent. Our loan growth was double the percentage of the industry average. Industry average was around 8.5. We grew by 16%. Now, because we are digital in nature, even though loan was growing by 16%, our net profit grew by more than 80%. Because digital nature allows you to not increase the cost at the same time. And that is where we see that whole 2025, we are quite positive to record. First quarter has been the record profit and record loan, and we expect the same for the whole year.